September 24, 2012, S&P 500 daily chart update. We hit that 1475 target on the S&P that we said we would go to if we broke through 1435, and we hit that. What we'd like to point out is that the S&P 500 has lost its winning streak and has pulled back to this daily half bar, not quite all the way, and it's at the 10-day simple moving average. Yes, it's a little bit overbought, but it's still very strong on these pullbacks. So we just want to highlight the fact that the S&P 500 has not continued to go higher for one reason. It was short-term overbought and it needs these pullbacks. 1450 is a major area here on the S&P. And so we have a narrow range. We have 60 down to 50 or 50 back up. 1475 was where we were getting off board on those call contracts up and out of the money. And that was our target. And the S&P has a very mild pullback. There is no bear concern or anything like that other than it's overbought. And you get pullbacks, and we're going to be watching a support level. So it snapped a 3-day winning streak almost in the last, today is Monday, this is Friday, and this is Thursday. However, we benchmark it right here, right below 1475, and that is our pullback on this bull rally pullback in the S&P. It's about 20, close to 25 handles. And that's about normal these days since we've gone from bear to bull cycle going into calendar year, and we're in the fall period. So once again, we'll be watching this daily breakout bar will be key. The 20-day simple moving average down here on the S&P will be key, and that's going to be 1434, right where the breakout happened to get to 4. So that's this red line right here where I drew the trend line. That's where the breakout happened in this price area to get to these highs, where that reversal is. And where the pullback should come to would be the 20-day simple moving average. That is what the closing price below the 10-day moving average. It's rising. It's very bullish for people. And this, there is no selling days to be alarmed about, because if you have a selling day, it's going to have to be a big fat red bar like this green bar. But we don't have that. We have a narrow range pullback to support. And that S&P hit our target, and the 20-day moving average down here is going to be support. And that is also going to be right around where this breakout bar, bam, to that high, that 3-day high reversal came into play. So once again, my friends, the S&P has broken its winning streak and has had its pullback as it should. We'll look at these lower support levels and moving averages and 10-day simple moving average moving forward into the closing month of September of 2012, Monday through Friday on the S&P 500 between support and resistance using the daily charts and other chart frames. S&P 500 closes at 1456.89, down only 3.26 handles. No bear reversal days like you're used to seeing, $25 or $30 down in volatility. No. We're still holding that bull rally right now. And the contraction in the S&P, it's had a reversal, and that's all we were calling for, where that resistance would be to a new pullback. That's what this is about, MMT, nothing else. It's still a remarkable bull trend in the S&P 500 at this current level, mathematically, and price level.